This is Robert Kraft, and I'm your host for the Planet MicroCap podcast. And joining me right now is a very special guest. He's joining me all the way from Singapore via Zoom. You know, we're not in person. This is via Zoom, of course. It's a gentleman that you probably know best from his Twitter handle at Slingshot Capital. His name, I am revealing, a little drum roll here, is Kelvin Seetoh. He is from Slingshot Capital. He actually has a couple other titles as well, and I'm very excited to have him here today. So, Kelvin, thank you for joining me, and how you holding up?
Hey Robert, it's been nice. In Singapore we are lifting off the circuit. In Singapore we call it the circuit breaker kind of thing. So there's phase 1, phase 2, phase 3. Now we're in phase 1, so things are getting a lot better. I think people are going back to schools. Businesses are operating again, and now you can go out to buy your favorite ice cream, your desserts, whatever it is. Because for I think almost 1 month we didn't have any of that.
Yeah, no, it was. I think I remember that Singapore. I think Singapore was on complete lockdown. Like you can't go to the markets or anything like that, right?
Yeah, I mean, like just that necessity stuff, it's all right, but anything extra, it's all had to be closed down. But I think we made a remarkable recovery and things are back on track again. So pretty good.
That's great to hear. So as I said, I'm talking to you. You're based in Singapore. This has been a marathon day. It's one of my favorite days. I interview at 8 a.m. Pacific and now 8 p.m. Pacific. So this is the jam. I love this stuff.
Yeah, man.
So Kelvin, as we always do here, I'd love to get your background. Tell us a little bit more about what led to your passion for investing.
Sure. Well, Robert, growing up as a young kid in a middle class income in an Asian country, I think my family was doing relatively well. But it was my experience in high school that made me want to work a bit harder, to strive for a better life, like most people. So, when I was in high school, I think I went to a school that was a bit, I think, like for a better word, I think prestigious. So my friends were wearing branded clothing. They had better travel experiences. And to be honest, like coming from where I was, that made me feel a bit envious, or maybe not a bit, a lot. All right, I feel very envious. So that got me started to think about, hey, how could I make more money? So without telling my parents, I started buying clothes from, United States and selling them in Singapore. So the likes, like G-Star, February, Ben Sherman, Armani Exchange, and many others. So I was pretty shocked because there wasn't a lot of people doing that. And I did that for almost a year and, had a bit of good money. But, to me, I was still a student back then. And I was at the fork road of my life that I said, should I focus on my study or should I do this as a side hustle and continue on this business? But, the truth was this. I wanted to get into a prestigious placement in Singapore's top universities. I wanted to get a government scholarship. So the thing is that I gave up the entire business, although that made me a bit of money and I could afford the branded clothing. And when I went out with my friends, that made me feel a bit better. So, growing up, we tend to be a bit self-conscious and we tend to base our self-worth on materialistic possession. But subsequently, when I went to, in Singapore, there's this thing called a Polytechnic, which is like, I think like pre-college kind of thing, pre-university. So back then I was studying portfolio management, security analysis. So it's really about understanding how stocks work. And, the truth was, although I was ranked top few in my cohort, but I always wanted to be the top. And I tried for so many semesters, but I simply couldn't get the top because maybe, there was always someone that's smarter than you. And I spoke to my lecturer about this and he said this, what's the amazing thing is that most of your classmates, he told me this, right? Most of your classmates are learning to get grades, but they did not experience what's investing like. So he said, why not give yourself a shot? It doesn't matter if you're young, just ask your parents for a brokerage account. I'm sure they'll give it to you. Just put your own money into it, right? And he gave me a book called One Up on Wall Street by Peter Lynch. And that got me off a very good start because I think that book essentially was telling me that anyone could succeed in investing. Anywhere I go, I see investors of all background, of all races, from any background, with or without finance degree, and they were doing well. So that really got me off a good start. And, with that, I think that's how, investing started. It was actually from a space where I was feeling very inferior. I was just trying to figure out how to, want to make more money. And that led me to study business. And honestly, I did not even know whether I have a passion in business anyway. I just knew that, okay, if I sign up for a business school, class, degree, whatever it is, that will lead me to wealth. So that was very naive, right? But when I went there, subsequently the things I studied, um, got me really intrigued, right? And that's how I excel. And to me, it seems like there's a natural affinity towards business, towards investing, and that got me, getting good grades, and eventually told myself this, right? Like, I cannot just experience investing through books. I got to do it myself. So being a young kid, I think that was a bit frightening. But I knew that I wanted to create a better life for myself, and that's how I got started.
That's so awesome. I mean,
Yeah.
so really it was born out of a sense of just, I want to take myself up to the next level. And it was really an evolution. It went from, I want to take myself up to the next level. I'm going to study business. And then within that, investing. So what was it when you first got into investing that really, how did you get into it? I mean, were you investing in US equities or equities at all? I mean, what was it that, while you were in it, where you're like, I'm kind of hooked. I'm going to keep doing this.
So the thing is that when it comes to all investing, we really wanted, I mean, personally for myself, I'm rather risk averse. So I invested like 1,500 to a company based in Singapore. So it's Singapore Equities. And I think I was pretty lucky because a few days after they reported a great result, I think the share price increased by 20% thereabout. And from there, I made about like close to about, I think was $400 thereabouts. And that shocked me a bit, right? When the first time you experience that kind of tremendous gain, I wouldn't say it's tremendous, but I would say that you just made money like that, like looking up on data, doing some work, 2 hours of work, and there you go, money is being made. And I think back about the days where I had to meet customers who are buying my clothing, and sometimes they, may not turn up, and my time to travel to their place, is wasted. I think about how many clothes I have to sell to make that kind of money, So it really cemented the idea to tell me that, as I grow, I need to find a way to scale my money even better. So that really got me started. And to me, I always believe in, this saying that seeing is believing. So since then, whatever I've gotten throughout my life, like for example, you talk about in Singapore, all males have to go through a mandatory military service for 2 years. And although my pay wasn't a lot, but every single time I got my pay, I was buying every single investment book that I could land my hands on, right? But I was pretty lucky that I had time to read as well. So, I think I eventually got, to a state where, my results gotten quite good. Like, for example, I could share with you that, sometimes the military trainings might not be very fun, could be tiring, mentally draining as well. I feel like the day was so bad. But when I went back home and I checked, you know, okay, this is a bit very naive thinking, right? But when I went back, I saw the stock price, I went up, I felt like, oh, my day was okay. Today is a happy day. I erased every single pain that I went through, right? But yeah, since then on, I really gotten a lot more serious when it comes to investing, and I have never regretted since then. And the biggest passion, I mean, the biggest gift that I think I received is that I could turn my passion into something that I would see myself doing for a lot, for the rest of my life. So I'm pretty thankful that I spotted this hobby when I was young, because I think as I was speaking to many people, some of them only discovered it much later in their lives.
Absolutely. All right, so let's fill the gap. So, or fill in the gap from during your time in the military to where we're at now. So, did you take any jobs in finance or anything like that, or right out of the military you're like, no, I'm full-time investor. Let me just go from there. So how did you get to where you're at today?
Yep. So when I was in army, I think towards the part where I'm almost completing my tour, that means my service, I was still posting very frequently on forums, investing forums in Singapore as well. And there was a financial education company that was doing a very interesting teaching, right? They were teaching people how to invest, stuff like that. And I felt that resonated very deeply within me, because I felt like when I was starting out, there was something that is similar kind of school that teaches me how to invest, my life would have been a lot better. So I hop on to actually go and find out more about them, spoke to the guys over there. And I think that, maybe the founder must have seen something in me, and somehow or rather, he persuaded me to give up my government scholarship, persuaded me to give up my prestigious university placement. And, getting scholarship in Singapore context, in an Asian context, is something that is, very prestigious. To give it up like that, I think it's like committing a sin, right? But I felt like, investing was my life, and I felt that this could work out for my life. And it was a calculated move, right? Because I say that if I were to join his company and if I fail, it's okay, as long as I have my portfolio to cushion my expenses, right? So I decided to give it a go. And, I enjoyed it, because I was being paid to research. So that was really fun. I was being paid to share. I was being paid to see ordinary folks who had no knowledge being transformed, right? And to have that certainty in their life that, eventually if they go on to this path, 8 years, 9 years, they can be financially free. So that was something that was really, really nice. And subsequently from there, they started a new business segment that's doing funds. And, I was there also under their chief investment officer. And I had a great time, because I would say my CIO was someone that's very, for the lack of a better word, again, I would say it's quite harsh, because at 6 o'clock, that's where we knock off. He would just give me a new assignment. At 9 o'clock, he asked me, so what's the update? So it's really, really tough training. But, when I went out to meet my investors friend after, half a year, they said, hey, Kelvin, you have grown a lot. So I was actually very thankful for him, because he trusted me with a big percentage of the AUM. So that made me grow a lot. And eventually I decided to say, my wealth have grown to a certain size. I think that I worked really hard since I was young. I literally had no childhood, but that's pretty sad. So I said that, it's time to give up this job and let's travel around the world quite a bit. And then there's a lot of messages coming through Facebook, Instagram, asking me, whether could I do something similar to teach them investing. So I said, okay. So I came back to Singapore, started small class, and it worked out really well. In fact, I was fearful, like, although I'm an investor, but to ask me to run a business is totally different. So I had great team members. And today, this is where we are. The company is almost 2 years old. We have a team of 7. So I am enjoying every bit of it, because sometimes the people that come through the class, they are also people from the industry. So when I needed help from them, they could supply me with information that I could never get my hands on. So I think investing brings across people from all walks of life, really with a common goal of, achieving financial success. So that's what we are here to aiming to do, right? Yeah.
Yeah. No, I mean, look, I think from what I've experienced just in my own life, teaching also just helps you. So whatever you're teaching, you're obviously going to be you're going to be passionate about it. So it's just, it's going to help you in your learning curve, because we're all always learning. I think that's a good transition. I'd love to learn a little bit more about your investing philosophy that you've developed over these years. So what is it?
Yep. I've been thinking this for quite some time, and that's a good question, because throughout my life, I think in the earlier days when I did not get to know some people, my philosophy just didn't really work, didn't really get the results that I wanted. So I've been reading, listening to your podcast as well. We have some wonderful guests. So what really worked well for me, I think it isn't just running the numbers or the financial models, because essentially that's what everyone is doing. But ultimately, isn't it true that I think as businesses as just organized people coming together? So I think that, when it comes to analyzing people, or the people element, is very underrated, and probably no one cares about it a lot. So looking back, if I think about the Buffett days, why did Buffett actually had tremendous outsized returns, was that he was really keen to get information. So he would travel, buy a train ticket, travel to the company's HQ and get the balance sheet, get the financial statement. And that was how, he could simply make a lot of returns through investing in nets, right? So a lot of the time, I would think that Buffett actually spends time going out and meeting people, which led him to his outperformance. But today, if you look at how the world has changed, the internet has made a lot of information accessible, right? Your 10K, your 10Q, your 8Ks, whatever it is, is very accessible. So most of us are just sitting in front of a computer running models, and while that's okay, I think it's even more important to get out there, to call someone, to chat with the employees, to chat with other investors, get connected as many people as possible who are doing business with the listed company. So that is one thing which I felt it's really important, that have actually helped me gain a lot of conviction in the companies but that I invest in. But apart from that, I think in terms of qualitative measurements, I think that's actually more important, because the way I look at it is that quantitative numbers always tend to be the effect of good qualitative factors, right? For example, you have a great product that have a great value proposition and customers love it. You have a good marketing. This is our qualitative factors, which is, the cost. But what's the effect? The effect is that because customers love it, your numbers will show up good, you have a good profit margin, and you have great referral system, right? That actually causes this business to do well. So because of that, it took me almost like 2 years to ditch my old framework, because in the past, I was just running numbers, doing screening, and I thought that, hey, that's going to be something that, would give me the returns that I would want. But I would say that today, things are so advanced, anyone can run a model, anyone can do a screen. So what's more important right now is that I tend to focus more on the qualitative measure. And sometimes, even though the companies may not be profitable, but when I analyze certain metrics and I say that, hey, they're on the right path. There's this metric that I love to use a lot that's taught by my chief investment officer, is this thing called gross profit over total asset. So really is that for every dollar of total assets that you have, how much gross profit are you generating? And if that numbers improves over time, it's sooner or later, the business will be profitable, right? And I think a few qualitative things I look at is maybe, I like things that are maybe recession proof. But increasingly, I start to think that there's no such thing as recession proof. It's more like recession resilient. And also, for example, what are some companies that are riding on a structural trend? Because despite uncertain economic conditions, because if those companies are riding on a circular trend or a structural trend, they may still have some growth. So I think growth is very important. I consider myself as a growth investor, so I do really drill in very deep into that. We talk about companies with addressable market, unique products or services, and also very importantly, they must have a great culture. I think that's really key. So I think my portfolio is kind of like split right now. I have companies that are small caps. I think that's where I enjoy, and that's where I find joy connecting with people from the micro cap club as well. But I do invest in this thing called flying elephants, right? So these are like big caps that are growing rapidly as well. So there's this two kind of thing that I actually go for.
Got it. So I want to dive right in because there's so much to unpack there. So first things first, as you say, you really love to focus on the qualitative, but, and this is going to be a dumb question, I have to ask it, is you still have to do some kind of screening just to find those first few, and then you dive deep into the qualitative, right?
Exactly.
Okay. So what are some of those metrics that you look for? You say, okay, these are some of the things that, they screen out well for me. So now I'm going to take a deeper dive. What are some of those things?
So, like it used to be very complex, the things that I do, but increasingly I try to simplify it a lot, and it works wonder, right? So it's amazing. Like, seems like you do less, but you get more. So first thing here is this, right? I would always look for a company with a high gross profit margin, because if you don't have a high gross profit margin, because you see, gross profit margin is always the profitability of the products and services that you sell. So if your gross profit margin is not high enough, it shows that maybe there's a lot of competitors. It shows that maybe you can't price your products competitively enough. But if you have a high gross profit margin and you can maintain that for a couple of quarters, it shows that perhaps you have something that's unique that no one else can actually copy. And I would always believe that when a business have high gross profit margin, it leaves a lot of room for the business to have your, sales and marketing, your general expenses, such that when it flows down to the operating profit level, there's a lot to be left, Like, for example, an analogy that I could describe to you, it's perhaps like a funnel, right? There's a lot of water that's flowing in, but if there's a lot of leakages, all right, leakages are your costs. Then, by the time it reaches the bottom, there's not much water left. but you have a high gross profit margin, then you have plenty of water, even though you have some holes that's leaking out, your cost that's leaking out, you're going to still have a lot of money left for you as a shareholder, right? So that's one thing I look out for. And I think gross profit margin is something that is quite underrated. Not many people think deeply about it, but that's how I look at it. And and the second thing I look at it is something really simple. I always think of it as a I think investing sometimes, while I used to read a lot of investing books, but what I start to realize is that to really get good in investing, it's not just reading investment books, but reading business books as well. So I will always ask myself this question: what is the greatest form of a product validation? To know that this product has a great product market fit, that the customers enjoy the product, that the business is going to do well. It's simply this, it's simply revenue growth. But I don't look on, maybe let's say on a quarter to quarter, right? Let's say you can talk about like quarter one 2020 versus quarter one 2019, right? That's going to be an easy beat, right? But what I tend to look at is sequentially. Like, for example, quarter one 2020 versus quarter four 2019. Is there growth? And is the growth accelerating, or if the growth is being maintained? Because for a business to do that, it's going to be extremely tough. But if they can show and demonstrate that they have this trend, more likely than not, I think this business has certain unique characteristics. So I tend to use these two screeners. And I think the issue for me back then was that I was screening too narrowly, right? So a lot of companies don't fall into the basket. But now I try to screen loosely. And if I do see some interesting names, I will go to the website, see what they're doing, and I think that whether does it fit into my criteria. So I think that is two things that I look at in terms of screening.
No, absolutely. Okay, so then we now know what you screen for and how you look for it, and it sounds like it sounds like you've loosened up those strings a little bit, right? Yeah. So now we're digging into the qualitative, and you're going into look at these businesses, because this is what I think I really want to focus on for our interview, is because it sounds like the way your process is unique, in that you really want to understand as best you can that there's some kind of product validation, that things are recession resilient, So what are some of the things then you look for from a qualitative level to make sure that that investment is something that might fit for your portfolio?
Okay. So I think I've benefited tremendously from Connor Haley as well. Connor Haley runs Alta Fox Capital. So if you look at the companies that he invested in, so I'm not sure whether, I'm not sure whether he's still invested in those companies, but if you look at maybe perhaps one of example, Koru Medical, right? Koru Medical. So for example, there are some people, unfortunately, they are being born with a white blood cells deficit. So meaning, you need your white blood cells to regulate your body to actually fight off the bacteria. Otherwise, in the worst case scenario, you might die. So Koru Medical actually does some form of injection device that injects immunoglobulin into the body, and that help the human, just kind of like prolong the life, and just to inject sufficient white blood cells to fend off the bacteria in the body. So something that's so essential for a human life, right? What are the chances that it can be cut off during a recession? I think it's nearly zero, right? So that's what I think about. That's one component of quality. Or the second component of quality, today I own a small microcap called IntelliCheck. So what they do is that they help retailers, they help banks to fight off fraudulent activities. For example, if this fraud, for example, is roughly about maybe $5,000, right? Or let's say, for example, for the whole year, your company may have lost maybe 20 million because of fraud. And if you use IntelliCheck service, and you are only required to pay only 2 million, and they have a high accuracy rate to stop all the fraudulent activities, in this case, Robert, would you pay if you are the company?
I mean, sure, why not? Yeah. No, yes. Okay, yes. Sorry. Yes.
Yeah. So I like the companies whereby, it pays for itself. This term called it pays for itself. Because of this problem, all right, that is a $20 million problem, it can be solved by a $2 million investment in their products, right? IntelliCheck does that. So it's an easy sell. Like I don't have to do a lot of persuasion to actually sell the product. And because of that, the product is going to be, the adoption rate will be very, very high. So I like that. I like to see that as well. Just give you another scenario. For example, in terms of agriculture, in the past, people used to hire manual labor to actually differentiate rotten apples with the good apples. So they use visual eyes. And sometimes, humans, we may not be totally accurate. So what they do is that, okay, this company is not it's not a small cap, but it's a huge company. It's called Keyence. Keyence, what they have is a sensory system whereby using a sensor, they could identify the bad apples and the rotten apples. And once they're being identified, down the tray, the moving tray, they will flick out the bad apples automatically, right? With a very high accuracy rate. And, compare the investment in the two people you have to hire to actually sort out the apples versus the machine is way cheaper, and the machine will always be more effective than human beings. So that itself is actually a very easy sell. So I like that. So I like businesses that pays for itself. I like businesses whereby, when the salesperson come up to the business and say that, hey, would you want to adopt my product? And on the other hand, the business is going to look at it and say, hey, this is a great value proposition for my business, and it will be a brainless decision to adopt the solution. So that's something that I look at, because something that saves money for you, something that grows your revenue for you, it's always going to be something of an essential need. It's something going to be mission critical.
So it actually kind of sounds like, well, hold on real quick, actually, just want to get your quick disclosure. Are you a shareholder of Kuru Medical? You said IntelliCheck you were, and Keyence.
I'm the shareholder of IntelliCheck, Keyence, Kuru Medical, no.
No? Okay, cool.
Yeah.
So, it actually kind of sounds like, based on what you just said, is that you like to kind of look at companies that are more B2B versus some more retail plays. Because in the B2B, there's that different there's a different sales process there, where most businesses are always looking for ways in which to run themselves more efficiently. Am I kind of on that track there?
Yeah, and I think you hit on the right note as well. When I was starting out investing, I was investing in a lot of businesses that were serving mainly your SMB or small medium businesses. But most often than not, I think these businesses have very limited operating history, or maybe they may not have a strong balance sheet. Some do have great balance sheet, but some don't. And as a direct result, when it comes to an economic hit, right, some of the small medium businesses may not survive, and some of them may have their own cash flow issues as well. So they may not pay up on time, and trade receivables are something that I don't really like to see it piling up. That shows that maybe you have customers, but they may not be good paymasters. But for enterprise customer, they have established history. They have great. They themselves have their own customers, which are, like really strong customers as well. And the beauty of serving enterprise customers, I feel, is that if you have convinced one segment of their department that your product works, and depending on how big the enterprise customers are, they might actually adopt the product for you, and sell your product to other departments as well if it's relevant. Or maybe it always pays to have an enterprise customer, because why? It's great referral, right? You can tell anyone that you have this, maybe Microsoft as a customer, right? That shows a lot about the product, because people will just think, okay, if you have Microsoft as customer, meaning Microsoft must have validated you, must have assessed your product, and to know that your product is really good before they use you. And so one thing that I've learned is this thing called the kingpin strategy. It's like playing chess, right? The moment, don't chase for the small customers, chase for the enterprise customer, because once you chase the enterprise customer, you put the customer's logo on your company website, just a matter of days, all the small medium businesses will come calling up on your phones. They realize, oh, okay, Microsoft is using you, you are being validated, and they will come to you naturally. So once you chase an enterprise customer and you have gotten them, your small medium businesses will just come to you naturally. So that is usually a much easier sales process. So it's more like positioning yourself to be a product that enterprise customers will use, and you enjoy faster you enjoy, you will not have this issue of, your customers not paying up, and it's more resilient even during an economic recession.
Got it. Okay, so that was a great clarification right there, because it seemed like that's where you were going with your strategy, and that was the type of companies from a qualitative level and a business strategy we're looking at. So okay, so now I want to take it to the next level, because you mentioned actually a little bit earlier in the interview that you really like to understand the corporate culture of the companies that you're invested in and getting to know management. And we were talking offline how you just took an awesome trip out here to the U.S. and hung out with a few MicroCap Club members and took you around. And I have to ask. I mean, you're based in Singapore. You're invested in some North American business, or just you're a global investor, really. I mean, so how are you able to manage this importance for you of talking with management, understanding the culture, and then also maybe sometimes your geologic location?
Yeah. Robert, I felt a bit sad because when I started out investing, I was investing in a lot of Singapore companies. Singapore is not a big country, right, compared to you guys, and a lot of companies, they tend to be value traps, or they tend to be companies that don't compound value for shareholders. Um, but I was quite grateful because I made a switch in my mind, and it wasn't easy because there wasn't a lot of people that I can speak to about US companies, right, in Singapore. So when I started going to US, I was kind of confused, and that's where I found an incredible place called Twitter. That's where I get to meet you guys. I get to see the people you guys talk to, and I think it's not normal for Asian to just reach out to people. We tend to be more reserved, more introverted as compared to Americans who are more extroverted. So, but I made it a point that, if I want to grow, I want to do better, I need to meet more people, and I got to maintain great relationships with them. So if I do see people that I respect a lot on Twitter, I would just send out a message, just really sharing with them, telling them how much I appreciate their work. And once in a while, I do really make it a point to just maintain connections. And I think my life has been made a lot better because, even though I'm in Singapore, I just feel more aligned to the things that you guys are sharing on Twitter and also on your website as well. So I think, that isn't a big issue for me. For me, I think I'm also committed to the process because today, even as I run a company, I think as I'm contributing, sharing information, I think I have to continue growing. I need to grow for the people that I teach, right? So despite some weird hours, I was calling management at 2 a.m., 3 a.m. I feel it's fine. I feel it's great. And I feel that I've learned a lot as well. But more importantly, I think there's some different way on how we think, being Singaporeans and Americans, how we think. Because in Singapore, I never knew this, but in Singapore, most of us, when we go to fast food, right, we would just eat there or we just take away. But I didn't know that, in America, drive-through business for fast food restaurants tend to be up to 50% of their total sales. So that was something unique for me. And increasingly, I started to learn more about America, how it works. And I think what really made everything different for me was finally telling my team and say, let's go to America. All right. So that was being done in February. I had a lot of great fun because we also want to make it work, right? We didn't want to make it just a fun trip. We want to make it a work trip as well. So our schedule was pretty tight. We were able to meet some incredible people. Ian met us, Michael Liu met us, Gordon Bate, Order of Joys of Compounding, met us as well. And when I start to enjoy some of the fast food over Chick-fil-A, right, In-N-Out Burger, it was so different for us. And seeing how things work really there and meeting the locals, that made a hell lot of difference for us in our perspective in investing.
Got it. Well, let's follow up on that. What were some of those things that helped that, on that trip you were able to bring home that helped a lot in your investing thesis and your way in which you evaluate companies?
Yeah. So one of which is I actually own shares in Power Technology. So they are like a cloud POS kind of a business, and they serve enterprise customers. So they have Starbucks, Wendy's, Dairy Queen as their customers. And to me, if I did not know that drive-through business is such a big portion of the restaurant sales, I would be thinking to myself, okay, COVID-19 hits, restaurants going to have no sales because everyone's closed up, right? But then, now that I know there's drive-through business, so I know that the impact's not going to be hit that badly, right? So as a disclaimer, again, I own shares in Power Technology, and sometimes I do know of like the big banks that you guys have, Wells Fargo, Bank of America, things like that, Chase Bank as well. So there are some businesses that I own that have these banks as their customers, and for them to actually roll out, I actually got to see firsthand the presence of locations of these banks, right? And that really helped me ascertain that, hey, they have great visibility, they have great location, and they will do well. Okay, so that really helped me a lot. And maybe this isn't going to be very surprising to some of the viewers over here. I study history and geography, but really being down there, seeing how big America is, really made me understand how big the addressable market for some companies are. Because if I'm going to think of Singapore, I'm going to say, okay, I just take a population size, I do some estimates, I know, okay, this is probably the sales you can generate once you hit certain saturation rate. But when I travel to America and there are certain states where we drive a lot, we start to see a lot of businesses from different places. And that gave me a kind of like a conviction to say, hey, even this company I'm investing right now grows 10 times, it isn't a stretch mark. It could go even further because just looking at how big America is. So that were some of the factors that have helped me a lot.
For sure. And I'll give you a bit of piece of advice. We always, it's fun because, I do a lot of interviews with CEOs. You always want to be careful when, because I like to ask what's the size of your total addressable market. It's so funny you bring it up because there's times where you get that crazy, collectively, if we hit all these different verticals, we'll get the 23 billion dollar market. They're like, oh really? Oh, that's your total addressable market, 23 billion. Okay, all right, that may, I guess if you hit like a less than 1% of that, you'll, okay, that's sounds like you might have a business there. So that's pretty interesting that you noticed that.
But I think it pays to be skeptical as well, like something that has to be realistic, and something that could be executed upon, right? So I think it's important.
Well, I think actually, I feel like it's to your advantage, the fact that, you're in Singapore, you're based in Singapore, Singapore, the economy there. So you're actually probably more used to being able to put together more, I guess, modest total addressable markets. So you can model out more realistic ones and then be like, okay, all right, so that's what they're saying their total addressable market is in the US. All right, well, let's assume it's half that. Will that still make sense? Is that still, will they still be able to address some of that market even if it's half that?
Yeah, I mean, sounds funny. Like in Singapore, we are all taught to because there's a lot of internet scams, a lot of stuff. So I mean, it's everywhere, every country, but Singapore takes a very proactive approach to inform people of potential scams online here and there. So we grew up in this culture that let's be really cautious about things that we see out there, because things were it's not what they say but what they do and how they're executing it. So that really helped a lot. And I think so I met a guy called Leon Lin, fantastic guy as well. He was previously in Singapore but went to US, and he gave up the prospect of a high paying job to actually get there in America. So for me, then he shared with me something which really hit me really hard. He said that for a lot of Singaporeans, we tend not to speak out. We tend not to want to meet new people. And that actually is one of the biggest downside. So knowing that, I actually, hearing that from him, it gave me even more drive to say that, hey, in Singapore, actually, we are very diverse. Even though we are Asian countries, we have, I think there's this former co-founder of Facebook that actually decided to base himself in Singapore. And in Singapore, to be honest, have also been benefiting from the fund flows from Hong Kong to Singapore, because we are known like two financial hubs that are very close to each other. So actually there are more expats coming in, more foreigners coming in, and it's my hope my dream is to connect all these people together to be part of a community whereby we can share a lot of ideas. Because increasingly, I'm also starting to see a lot more Americans coming to Singapore. So hopefully there could be some ideas flowing in and out. I think that would be really great.
I agree. That would be so cool. But I have to comment. You're an enigma, dude. I mean, look, you said that most Singaporeans are conservative by nature. Look
Yep.
at you. You're going after U.S. microcaps that some might still be a hope and a prayer. I mean, you're the definition of risk. You're the riskiest guy in Singapore.
Yeah, but yeah. So one thing that I've learned is that if you are doing what everyone is doing, then you expect the same results as everyone. You just want to you got to do different things to have different results. So I think Ian have also shared with me that most microcaps are like concept stocks. They management can't really execute. They're just pumping up, being very promotional. I think you're absolutely right. It's sort of risky over there, but that's where the opportunities are. You could really find the good ones where people just categorize as microcaps as highly risky. One of the companies I purchased last year was MicroCap, which have done tremendously well. I think it was 2 years ago. Yeah, got privatized by Charles River. So that is trading on OTC. It's one of the highest definition of risk, right? But that goes to show that there are gems among the rocks.
Oh, absolutely. No question about it. And that's why we do the work, right? And that's why you make a trip to the U.S. because if you turn over enough rocks, you're gonna find a diamond in the rough at some point. Especially, I mean, there's so many possibilities out there. It's just, but you're right. There are a lot that you just have to be. You have to be a little skeptical, a little careful, and the more you do it, the more you'll understand and kind of know what to look out for. So,
Yep.
So Kelvin, we're now at my favorite question to ask. So, I got to know from you, what investing experience would you say taught you the most in your career?
Sounds a bit painful. Okay, so there was this company that I purchased that is in that was way back. It's called, so it's gonna sound a bit foreign to a lot of people. It's called Zhongao Home. Yeah, so basically it's a property management company, and you would think that it's going to be it's a decent business. It's trading at very low multiples. That got me attracted, and now I don't look at low multiples companies anymore because they tend to have the reason why they're trading at low multiple. There could be some reasons, right? So for me, I realized that I should have caught that, right? People, Chinese who buy properties in China, they just bought the property and they just leave it there, and they may not stay there. Like a person could have like 20, 30 over properties throughout China. So when we talk about Zhongao, it's a property management company, how do they get their revenue? They get their revenue through collecting property management fees. So when the guy is not there for almost 2 years, how are you going to collect the property management fee? And there's no law to say that if the person doesn't pay property management fee, you can seize his property, because there's no such thing in China. And even you do that, it may take a long process. So while the company was reporting very good numbers, pretty decent ROEs, trading at very good multiples, but the core question is this, right? When I realized much later on is that they had this issue of trade receivables, right? It was piling up. It's already past the credit terms, and they're not impaired yet. And some of them are past 6 months, 9 months, and soon enough, they have to write off certain receivables, and this is the reason why they've been trading at low multiples. So when I look at that, I thought it was interesting. I bought a bit, actually not a bit, but quite a bit. That was like some time back. So later on, I realized, yeah, that's an issue, and that really got me to always look at the aging trade receivables analysis. I think that's something very easy to understand, and that also shows you have good paymaster, you have good clients as well. That's one thing. And second thing is there was a company that I bought in Singapore. Okay. So the thing was, when I bought the company, it was good. I was quite hopeful about the business. And the funny thing is that eventually the business turned out the way I wanted it to be. But I did not get to enjoy the gains because of one reason. There was this quarter where they didn't sort of do quite well, but the business was still on track. But the business plunged by 50%. And to me, even though back then, you know, it was already undervalued, it got even more undervalued. But my state of mind wasn't just right, because every single day you start to see your loss from, let's say, 4 figures rising to 5 figures. The loss just kept compounding, right? Reverse compounding. It gets to you, and you just wonder, wow, what if this continues going down and down and down and down? And what would you be doing then? You know, can you live with it? And to me, I was in such a maybe a state of mind that I wasn't thinking right. And even though it was so cheap that I was just not in a good state of mind, and I just sold my shares. And 3 months later, it went back to its original price. I lost over like $80,000 over there. That was in the earlier days, so extremely painful. So two lessons so far. One is maybe the trade receivables issue. Second is really your emotional state. And what I realized for me, what I should have done is that, when it comes to investing, a lot of us tend to like to invest by ourselves, right? The mistakes we tend to keep to our heart. The way we analyze certain companies, we tend to keep to our heart. And if a person challenges our thesis, we tend to get defensive about it, right? And you try to defend it, you try to plug a lot of information to kind of defend your thesis. But to me, what I realized that successful investors, they tend to have good sounding boards. They have a community of friends that they can actually ask, So today, what have changed for me is that I would actually present my thesis to people that I trust. If you have gone through 5-6 people who are competent investors and they tell me that it's sort of good, I think the chances of success will be higher. And instead of finding information to defend a thesis, today I'm going to say this: what am I missing out? What are some things that you think I could improve on my thesis? Would you think that my thesis would play out? In your line of experience, what's something you think I could improve on? What are some things, the gaps that I have? So I think every one of us go through mistakes, and the thing is that if we don't reflect, mistakes will just continue compounding, right? But I think being investors is not just analyzing every day, but what if today, just going out to a nice lake, walk, think about the mistakes, reflect, what could I have done better? What was the mistake? And your mind works in a mysterious way. Next time when you're about to make the mistake, somehow your gut feel will tell you, hey, this is not right. You perhaps want to step back a bit and really look at it. And so there are some companies where I don't exactly know what's wrong, but my gut feel tells me something is wrong. And I step back from it and I didn't invest. And the business actually turned out to be terrible businesses subsequently. So there are some things where you can't really explain, but I think over time it gets better. And I think that this whole process of learning mistakes can be really shortened when you have great mentors, when you have great community, right? When you hang out with great people and you learn from them continuously and reflect and write maybe some form of journal. It helped me tremendously.
I mean, it sounds like your gap really shortened once you were like, okay, it's time to realize that investing is a team sport and not so much tennis, right? But it's not that individual sport anymore. Once you realize that you can rely on, there's other people that this is a win-win game here. Especially when you're dealing with other investors that are more long-term, like, and have a similar mindset as you. If you don't necessarily want to talk to the short-term investor that might be looking at the same company because there's, it's a shorter time horizon. You're not totally sure how long they're actually going to stay in it. So their thesis is a little, different, right?
Exactly. True.
Yeah. All right. Well, we're there, dude. Kelvin, where can my audience go and find more information about you? Follow you on Twitter. Do you have a website for people to also go to as well?
Currently, I'm actually building a website. So for now, I think follow me on Slingshot Cap, right? So that would be great. And Robert, I've been enjoying your podcast a lot, and I'm very thankful that I think Americans, you guys are really amazing. You guys share very openly, and that really helped to make every investor out there a better investor every single day. I'm really happy.
Yeah, no, I'm just very thankful that you're a listener, and I'm very open with the fact that I'm a terrible investor. So I'm not stopping for any time soon until I get better. Hopefully one day, we'll see. But Kelvin, thank you, man. I really do appreciate you taking the time to do this interview with me. I really do appreciate it. And stay safe. Look forward to meeting you one day. You know, I think we already made plans on going to Singapore at some point. So, well, you know, I definitely hope to take a trip out there. But if not, next time in the U.S., you know, I look forward to meeting you in person.
Yeah, I'll bring you to the best food in Singapore.
Yes, let's do it. All right. Thank you, Kelvin. I really appreciate it.
Thank you.